Okay, we have Apple earnings just crossing the wire right now, and this is for the fiscal second quarter. Let's go to the revenue number. Meeting analyst estimates, $95.36 billion. Analysts were looking for $94.6 billion, so just slightly higher there. EPS of 165 versus 162. In terms of the greater China revenue for the period, $16 billion. Analysts were looking for $16.83 billion, so that is a miss there. Apple also raising its dividend, which is what it expected to do, and also authorized an additional $100 billion in its share buyback, up to $100 billion. So there's a lot of questions remain about the use of cash. The iPhone revenue for the period, for the second quarter, $46.8 billion. Analysts were looking for $45.94 billion. And it goes to that idea that people were trying to front run the tariffs by buying up iPhones.
Yeah, going back to those expenses, though, we talk about expenses going up. I thought it's also interesting, too, to see cash and cash equivalents going down about 14% year over year, down to about 32.73 billion, only 32.73 billion. A chuckle at that, but it gets to this idea as to where the next investments are coming in. Services revenue did actually surprise slightly to the upside, a 12% gain here. And overall, we talk about gross margins holding at similar percentages as what they were last time. Caroline Hyde still with us here, the co-host of Bloomberg Technology. And on the surface, Caroline, I mean, the numbers look decent. Of course, the big question is, what are these numbers going to look like over the next couple of quarters?
What is the forward-looking guidance? And they never really give it in the press release. We have to wait for what's said on the call. But more broadly, there is a slight weakness still in China, I think, in terms of their fiscal second quarter sales. And we did see perhaps that pull forward, that inventory. Maybe not that much more. 46.8 billion versus 45.9 billion was the expectation. But I think this is a company that's still trying to say, look, we're steadying it for you. We're giving you money back. We're going to be buying back stock. We're going to be giving you a dividend. But ultimately, we want to get devil in the detail. Also, they say we welcome the 16E, of course, this slightly lower-end phone, which had a lower price point. But remember, had most of the tech that the iPhone 16 had more broadly. What does that mean to any cannibalization and what phone people are actually buying at the moment?
It's worth noting here that iPhone revenue, even though it did top analyst estimates of $46.84 billion versus the consensus estimate of just under $46 billion, was only a 1.9% increase from last year. So that goes to show that even with a lot of people rushing to go buy iPhones, you're not seeing a lot of growth here in this one product.
And I think that's what people are worrying about from the AI side of the equation, because why were you going to be upgrading at this particular moment? iPhones last longer, they're ever more powerful, we therefore wait longer. And many felt, okay, AI, the Gen AI offering is going to be where it's at, but Siri has failed to impress many. We feel that they're behind the curve in that sort of element. And so it didn't just catalyze the desire to go and upgrade ahead of an iPhone 17, for example. We all want to kind of understand where the services side of the business goes as well, because that is the power of Apple. That is the ecosystem. And that is why the CFO in the note says, of course, think about the amount of devices that are in people's hands now. Well, they're currently talking about second quarter service revenue actually kind of meeting expectations more broadly. But what does that look like in the forward-looking guidance? Can they increase prices, or perhaps people stall on actually upgrading their phone?
All right, Bloomberg's Caroline Hyde, co-host of Bloomberg Technology. Thank you so much for the instant reaction here to Apple's latest results.